Good, thank you everyone. So just before we get started, I just want to ask the people here, who has come to Lisbon for this conference because they want to make some sort of change or improvement to themselves? Please stand up. No, let's stand up. We're on a stand-up theme today. That's, Good, so that's pretty much everyone. Okay, now sit down. Now, who is here because they want to have some sort of impact on their own company? They want to change that. Sit up, stand up again. So not quite as many. Almost everyone, but not quite as many. And who is here because what they would really like to do, sit down. I'm going to make you stand up one more time, though. Who is here because they would really like to be having some sort of larger impact on society? Good. Okay. And I think one of the reasons, okay, you can sit down again, thank you. I think one of the reasons we're here is because we want to connect the dots between those three things. Between our own lives and how we organize our own lives, between the organizations that we work at, and between the larger society. So I'm going to start with a hypothesis. The Silicon Valley model for economic innovation is broken. It is not delivering the outcomes for the people or the companies or the investors, for that matter, or society that it was meant to, or that it claims to deliver. Oops. And the reason for this is we can see that it's contributing to homelessness. It is leading to an extreme concentration of wealth, and there's been an externalization of social costs and a privatization of profit, and this is just not sustainable. So who here has been to San Francisco in the last 3 years? Yeah, and south of Market? It is devastating to see other human beings in that condition. 2 years ago, I was at a super interesting innovation lab for biotech, doing really interesting stuff. We actually made a couple of investments in companies there. You step outside, and you have to step over people who are literally dying on the street. And this homelessness problem in San Francisco is just getting worse. This is not just a problem in San Francisco, though. I live in Vancouver, and the homelessness, not the current mayor, but the past mayor, was elected with a promise of eliminating street homelessness. And he made a small dent in it at first, but things really just continue to get worse. This is not a sustainable society, and it is not the society that I want my granddaughters to be living in. And the same thing is happening with the concentration of wealth. This is the Gini index. The Gini index is the standard index economists use to measure concentration of wealth. So if one person in a society had all the wealth, then the Gini index would be 1. So the lower the Gini index, the more wealth is equally distributed. In the United States, it's at 42. And it's just been going up over the years. So the graph and the tabular data are slightly different data sources, but it's reached a crisis point in the United States. But the same is true in many other countries. In China, in Portugal even, it's 36. In Canada, it's 34. In Canada, we think of ourselves as a very equitable society. We are not. Canada is bullshitting itself when it thinks that it's an equitable society. It's not, and it's getting worse. And it's getting worse fastest in cities like Toronto and Vancouver. But we can see the same trends happening in Montreal and Ottawa and even Halifax. So I used to work at Monitor Group, which owned GBN, and we did a lot of work in scenario planning. So it's always good to, I think of different possible futures and the different possible futures we may want to create. So where we're headed now is one where we are getting wealthier. There is true wealth being created in the world through innovation. But that wealth is increasingly concentrated. And you have I have to admit, I'm one of the people where the wealth is being concentrated. I've done very well out of the innovation economy. And actually, I'm here in part to atone for my sins, or I hope so. But a society in which it's getting wealthier, but wealth is concentrated, is not a great outcome. But neither are some of the other outcomes. I don't think any of us want to live in a society of shared poverty. That's not our goal. And a society where people are getting poorer and wealth is getting more concentrated is perhaps the worst of all. So my goal in the sort of last, I'm 60, and my goal over the last, I think I'll continue to work for another 20 years or so, health permitting. My goal is to try to push us as much as possible into that shared success quadrant. So how do we do that? I think we have to look at why we even have companies. What's the point of having a company? The classical answer from Ronald Coase is firms are a response to the high cost of using markets. It is often cheaper to direct tasks by fiat, command and control, than to negotiate and enforce separate contracts for every last transaction. Such exchange costs are low in markets for uniform goods, but are high in other instances. So this is the classic microeconomics explanation for why we have companies in the first place. And as we've thought about this, I think we've discovered that this is a very incomplete answer as to why we have companies. So just to give you a little bit of context on my own background, what I really like to do is start companies. And I've been doing it basically all my life. I started my first company when I was 24 and living in Tokyo. I continue to start companies, and what I'm working on now is Ibbaka Team Fit, and we're going to talk a little bit about how we've tried to design ownership at Ibbaka, and why Team Fit comes into this. Ibbaka is a fairly successful company. We've got a great list of customers, and we're doing some impactful work. I'm also a very active angel investor. I invest both directly and through a fund called eFund in Vancouver, which is a team-based investment fund. And I, because I can't help myself, I do some work as a company advisor. So that's a little bit about my background. Ibbaka was created as a test case. So we wanted the people that came together to join Ibbaka wanted to see if we could change how companies are owned and operated. We had all worked together in one way or another over the past 20, 30 years. 30 years? Yeah, well, 25, 30 years. And there were 6 of us that came together with very different skill sets. Everyone from people with a background in machine vision and AI. Lee Iverson, who's that guy actually did the original coding for Siri before it was bought by Apple. David is nuts. He actually he's designed chess in the projective plane. If you really want to twist your brain, try playing chess in the projective plane. NQ is a Korean designer that we brought from Korea to Canada many years ago for one of our earlier companies, and so on. So we have deep interconnections. So that's just a little bit of background, some context setting. So let's come back to the question is, why do we really have companies? Because this impacted our decision to start Ibbaka. So the first thing is that we wanted to work together. We wanted to pool resources. I can remember the first time when I was about 22. I was a translator, a Japanese to English technical translator. It was part of what I did. And I had taken on so much work that I realized I couldn't do it myself. And I thought, I better start a company. That was actually how I started my first company. And it grew to about 200 people over the following few years. But another reason that you get together to create a company is to share risk. I'm sure everyone in this room knows the statistics, about 70%, 90%, depending on who you read, of startups failing. There's a lot of risk in starting a company. And one of the reasons that you even have corporate structures is to share and distribute risk. And finally, many people start companies as a way to attract capital. But that's only one part of the equation, though. There's also the investors. So investors need to invest. That's the thing. A lot of people are nervous about walking up to investors and asking them for money. Don't be. The investors need to invest money, or otherwise they're not investors. But they do it in order to get a risk-adjusted return on their investment. So I make about 3 investments a year directly. The fund I'm in probably makes about 10 to 12. And we are making we know there's risk, we accept that there's risk, but we're investing in order at some point to get some form of return, but also to have a social return. Because there are many cases where we want to support some form of change. My current investment thesis is I'm very concerned about antimicrobial resistance. That's the way that antibiotics are becoming resistant. So I am working together with one of our main customers, BD, Becton Dickinson, it's a large medtech company, to how can we invest to deal with the antimicrobial resistance problem. So our investments are, part of it is return, but part of it is what's the larger impact we want to have on society. And societies care about companies too. That's why you have cities like Lisbon that are trying to attract startups here, fairly successfully, I'm told. They want to provide jobs. Every startup accelerator I've ever worked with, and I've worked with a few, jobs is one of their metrics. Are you creating jobs? Support communities. Innovation happens in communities, and you have to build innovation communities as part of a larger innovation strategy. And as companies, you have to be active and act in communities, which is what this group here is doing. That this is an innovation community. Society also needs companies to deliver goods and services and to drive innovation. So, as was mentioned, I've been involved with and engaged in design thinking for a long time, far longer than I like to remember. I worked with Roger Martin on some of the initial concepts that were used at Procter & Gamble to reinvent the Procter & Gamble business. I have my own definition of design thinking, though, which is a bit different from the IDEO Stanford orthodoxy, which is that design thinking is the application of patterns and processes commonly used in design disciplines in order to solve broader problem sets. So to me, that's the essence of design thinking, and I'm happy to debate this with you. However, we just did a major survey where we reached several thousand people in the design thinking community, and of course, about 70% of them think that design thinking is a process. The IDEO Stanford orthodox process. That's what it is. It's a religious orthodoxy. I don't have any particular problem with this process, except I think it does limit people's thinking in many cases. And I am going to use it to frame the process we went through to design Ibbaka as a company. And that's the sort of critical thing I want us to be thinking about, is that companies are designed. And the most important part to think about in designing a company is designing how it is owned. I do not think we will change the negative impact of the innovation economy on society unless we change how companies are owned. That's my basic thesis. So we started with Empathize. So as we were starting Ibbaka, we were also reading a book by Roger Martin and Jennifer Riel, whose name I can't remember, but it's one of their more recent books. And in it, it suggested that you actually build a mind map of your career goals. And being a good student, I do what I'm told, so I built a mind map of my career goals, and then we worked with everyone to do these mind maps. How many people here have ever built a mind map of your career goals? Put your hands way up so everyone can see them. That's fantastic. That's, usually when I ask that question, only 2 or 3 hands go up. I think it's a really good process. What we did then, and this is just an example, is we actually mapped everyone's career goals against each other. This is the Empathize step in design thinking. And we looked for the commonalities. And in Karen and my cases, we had 3 things that really came out. And by the way, I've worked with Karen on, I think, 4 companies in one way or another over the past 25 years. So I thought I knew her well. I've invested in her companies. She's invested in my companies. We've worked together. I've been on her board. She's been on my board, and so on. I mean, as far as business partners go, I thought I knew Karen better than anyone else. I would not have imagined what her career goals were or where the overlaps were. And the overlaps, let's see if I can get the laser to work, really a very important one around building community. And as a company, we invest heavily in building community. Another one is we both invest, and we're both very concerned with value creation and creating wealth. So, and the overlays, so I'm not going to show you, because factorial 6 is way too many different versions of this to show. We actually went through and did this for all 6 people in all the different combinations to figure out what are we actually trying to do by creating a company. In the define stage of the design thinking process, I'm going to try and go through these slides quickly so that we can actually have a bit of a discussion about these issues. But in the define stage, we wanted a flexible work environment. We wanted to be able to develop and implement new ideas. Lee Iverson, our main AI guy, when he was a PhD student, his advisor said, just make sure that you're working on problems that are big enough to be hard. And because if you're not working on a problem that's big enough to be hard, you're wasting your talent. And what Lee is most concerned about is not wasting his talent. When he came from San Francisco to Vancouver, he was for a while professor at UBC. And he felt that he was not being challenged enough as a professor in the software engineering department at the University of British Columbia. We wanted to make work that will make a difference. So not just a difference to ourselves, but a difference to the communities that we live in. And as part of that, part of the design that we ended up with the company is that everyone is expected to do a lot of work in the community, whether it's paid for or not. That's budgeted into our time budgets. And we want to make some money, especially some of the younger people on the team who have not had exits. They want to have some significant exits. Some of them would just like to make enough money to buy a freaking house in Vancouver, which is a multi-million-dollar proposition these days. Oops. Okay, so then the next step in the traditional design thinking process is to ideate. So what are the different forms of organization that we could use? Well, we could have just been a loose collection of collaborators. This is the time of the gig economy. The gig economy is theoretically, about free-floating networks of people who come together as teams and disperse and come back together. That's a powerful and really attractive model for a lot of us. We also could have created a nonprofit. I've been part of the creation of a number of nonprofits over the years. A friend of mine who created the Software Productivity Center was created it as a nonprofit, and then after 20 years flipped it into a for-profit. I did not know you could do that. Seems suspect to me, but anyway. We could have done a formal partnership, like a legal firm. We looked quite hard at that. We could be a private company. We could be a private company with investors. We could become a business unit of a larger organization. A couple of the large strategy consulting firms had been trying to bring some of us in to create a business unit around innovation and pricing. So there were lots of options here. And hey, we could have even had an aspiration to become a publicly traded corporation. There's a company in Vancouver called Vizier, which is probably going to go public next year. And from the time they were built, their goal was to go public. That was their only real purpose. It was to grow their revenues 3x, 3x, 2x, 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 and go public. And because they were laser focused on that, they've achieved their goal. And they've created, they'll probably have a market cap of about 3.8 to 4.5 billion when they go public. So they've created, so they were successful on their own terms. It's just that those terms didn't interest us. For those of you who follow concept blending and Mark Turner's work, this is a very abbreviated picture of a concept blend. And we actually, when we did this, we actually did a much, much richer and more detailed version of this, but it would have too much detail to put up here. So we decided to take some of the properties of a partnership and some of the properties of a private limited liability corporation and actually use that to design the company. With the idea of the shared ownership would help with the wealth creation, the freedom of association would mean that we could choose who to work with, and the freedom to work would be to choose products with social impact. And one of the conditions that a couple of the people had coming into the company as we started this was that we would not do work for, and then there was a list of organizations that I won't mention, but you can probably imagine who some of them are. So then there's the prototype phase. So we've now run this business for 3 years to see if it would work. To see, and that was our original deal with each other, is we're going to do this for 3 years. The Japanese have an expression, even if you have to stand naked on top of a rock, you should do that for 3 years. And I've encouraged my own kids, in their careers, even when they're not happy, to stick it out for 3 years and see if they can make it work, see what they can learn. We also spent a lot of time thinking about how we should design the ownership. So here's some of the critical decisions we made. The most important one is that there was only one non-transferable share per person. So what this means is everybody owns the same number of shares. The wealth is completely equally distributed among the partners. Anyone can invest up to 50% of their time in non-Ibbaka projects as long as the rest of the group agrees. And we ended up doing this, and we created the company that's referred to here as TeamFit. So TeamFit was a spin-off of the interests of some of the people at Ibbaka. Major decisions are made by consensus. I kind of wish we had not done that. Anyone can take up to 2 years off without pay and come back into exactly the same condition. We would have loved to be able to do this with pay, but we didn't have the financial resources to do that. And we had an agreed formula for how we measured the value of the company. And I won't go into the details. If people are interested, I'm happy to share it. But it's based on our experience as investors. We know what drives the value of companies. So we had an agreed formula, and we tracked value creation every month. So it kind of worked. We've operated for 3 years. We are a very high growth company. We are making good money. We've developed some super interesting IP that it never occurred to us that we would be able to develop around using of social network analysis in order to actually identify market segments within a variety of different data sets. For those of you who are geeky about this sort of stuff, we use a bunch of Neo4j technology, and we apply the Louvain algorithm. Happy to talk about that with anyone who wants to geek out on it later. And we're taking the whole pattern language school of thought and finding new ways to apply pattern languages. So one of the things we've done recently is we've worked with a major London media company in order to help them rethink how they can monetize their data, and we've used a pattern language approach to do that. So it's been lots of fun, and we have been able to commit not 20%, but a significant percent of our time to actually working outside of the company on social causes. So what worked? As a team, because remember, we're testing our prototype here. As a team, we built deep trust. This is a group of people that trusts each other a lot. We were able to support very different lifestyles because I'm not the oldest guy in this, the person in this group. There's one of the other people who's older than I am, and then there are people that are in their 20s. And we're able to support people across some very, very major life changes, including some tragedies, which was part of our goal. That's what we thought part of the role of the company was. We developed IP, and we've created significant wealth. But it also had a lot of downsides. So it's very hard to bring in new people as partners. And when a company is growing as fast as we are, this became a real issue. So we have a couple of people that clearly should be partners and are not. And we had a whole process for how we brought in a new person as partner, yada, yada. It didn't work. We were not able to scale. There are very different levels of risk tolerance. So for those of you who are fans of behavioral economics or prospect theory, you know that most people would prefer to avoid a risk rather than to get a gain. It's one of the basic findings of prospect theory. If you look at people who are entrepreneurs, most of them would rather take the risk in order to get the gain. We have very different psychologies from most people. I am happy to bet everything that I own every day of my life. Does not bother me at all. My wife might disagree with me, though. We had different needs on when we needed to realize the wealth. Some of us are older, we own houses, or we have our housing situation well established. We don't need to take large amounts of money out of the company. And decision-making could at times be incredibly painful. Trying to get 6 people to agree on almost anything is hard. And the decision-making is not taking place fast enough for the company to sustain its growth. So, what's next? So we did have a side project called TeamFit, which is a skill and competency management company. And we've decided to put the two companies together. And we're going to do this in part to make our lives simpler, in part because we found some real customer and technology synergies, but also it's going to make it easier to provide equity to all people contributing. And it's been one of my sort of ground rules, is that everyone I work with should have equity in whatever we're doing together. It's one of the reasons I left Monitor Group. So some of you may remember Monitor Group. It was a strategy consulting firm founded by Michael Porter. That's the story, and in fact, it was actually founded by other people, but we can talk about that over beers. But I realized at Monitor Group that people like me became partners. But the engineers, who were twice as capable as I was, there was no path to partnership for an engineer at a strategy consulting firm. And that did not work for me. So we actually bought part of the company and spun it out. We need to provide a path to liquidity to people who want to exit. So we're working on that. I wouldn't say we fully solved that, but we're getting close. We're thinking that we will go ahead and raise money. But of course, that's the devil, right? Investors, and I know because I'm an investor, change the culture of a company. And you're very dependent as a company on the culture and beliefs of your investors. So I'd like to spend the remaining of my time. How much time do we have left?
We have 10 minutes left.
10 minutes, great. See, I thought I could power through those. To have a conversation in this room and beyond this room on these critical questions. How do we finance innovation? Are VC and venture capital and private equity the only ways to finance innovation, or can we find other ways? And I've got a couple of things that I can suggest as part of the discussion. How do we balance risk and reward for early stage companies? Just go back to that statistic. Let's say that it's true that 70% of early stage companies are going to go out of business. So in most early stage companies, you ask people to work at a discount from what they would get paid in the market because they are going to get equity. And for 70% of those people, 70% of the time, that does not pan out. Now, the investors, such as myself, we have a portfolio approach. So we're investing in a portfolio of the companies, so this game works for us. It does not work for many of the people that are being drawn into the innovation economy. If you actually do the math, let's say that, and it takes 3 to 5 years, and that's highly optimistic. It takes 3 to 5 years to know if your venture is going to be successful. How many ventures are you going to work for? How many people in this room have worked for more than 17 companies? So one. And you're, I think, an outlier, right? You're an outlier. Outlier, there are very few people that have. Yeah. So people who've worked for, but if you analyze the venture capital and the angel investment numbers, you need to have a portfolio of between 15 and 20 companies in order to get a return on your investment. Most of us are not going to work for 15 to 20 companies. The system as designed is broken. And then finally, how do we ensure that costs are not socialized while profits are privatized? Take Airbnb as an example. Brilliantly successful company. I tend to stay in Airbnbs when I travel. But Airbnbs have huge social costs that have been externalized. On my street, in San Francisco for sure, but in my street, in Lisbon, in fact, Airbnb has huge social costs that it's externalized while it is internalizing all of those profits. This is not how to build a sustainable, resilient society going forward. So those are the things that I wanted to discuss. Can someone jump in on one of those threads?
Whose responsibility is it to answer number 3 on Airbnb? The government, shall we take the government more back into their role?
So it's a great question. So the question, for those who didn't hear, is whose responsibility is it to answer question 3 for a company like Airbnb or Uber or many other companies in the sharing economy? I hate that term, but I've given up fighting it. And your specific question, the specific question was, should the government play the leading role? That's I think, a very important company. What do people in the room think?
I think it's a great discussion. The German answer is always to protect the past from the future and to regulate, right? So the answer there is, yes, sure, we want regulation in Germany. You're basically trading off innovation, right? So I don't know whether that's a great way to go. I don't have an answer there.
Yeah, one of the issues I've seen a lot is the government is abdicating the responsibility, and therefore it's being thrown back on other groups with no real way of getting it across and no unification. So a lot of my work is about mapping what the actual enterprise is beyond the organization or the market. to understand what the responsibilities and the issues are, and to understand what the interactions are, because often they're very hidden, like the one about the effect on San Francisco of creating homelessness through Airbnb.
Other ideas?
Well, I don't know if this is too much responsibility for them, but it's not the responsibility of the product designer, because the product, we have to take care about the product, how to solve the problem, but also see how the product will exist in the context, and just be responsible that what we are putting on the market is helping for us to get the benefits or be the company we want, but also be responsible about our kid, the baby, the product, how, for what cost is we are getting that.
Yeah. These are all great answers.
I'll throw in one concept that may be useful, which is the idea of anti-clients. That an anti-client is someone who is in the same story, who fundamentally disagrees with the way that you're interacting with the story. And therefore reaching out to the anti-clients, finding out who they are, and then reaching out to them in order to find out how to make the story work for all parties is a way of dealing with it.
That's a super interesting idea. So did everyone, I think you were speaking on mic, so the idea of looking for who are the people who are the anti-clients, who are the people that are disadvantaged in the customer journey, who are left out of the customer journey, who are forced out of the customer journey. I think that's a very powerful idea. In the software world, we use anti-patterns quite a bit to identify that sort of thing. In the back?
There's actually some interesting work right now on the Flourishing business model. Has anyone come across that? It takes the business model canvas that you and I are fans of, and it adds some elements around it, like society. And where you have value propositions, which are value creators, there's also value destroyers on the map. Who's getting hurt? And it puts it right on the map. So if we start using that as our new base point, instead of just the business model canvas, we designers should use flourishing business model canvases. Yes?
Yeah.
Yes. Okay. That's what we can do.
And that comes back to the point about what is the product designer's responsibility, or the product or services designer's responsibility in all this. There was a post on the Design Thinking LinkedIn group a few weeks ago, I think, that said Juul, everyone knows Juul, the vape company, that Juul was an example of great design thinking that failed. And I think that the consensus response that Juul was, an anti-pattern in what they've done.
And I have an example of an anti-client in the Airbnb context of Lisbon, actually. Checking into the apartment that I'm staying in now, everything was fine, and there was a great introduction, felt really well taken care of. And the moment she leaves, the hostess of the apartment, there's a knock on the door. And it's the next door neighbor, or in the floor below. A worried mother of two saying that she's tried again and again to speak to the people who are renting out the apartment, to be mindful with noise and parties and such, which ultimately is a societal and social cost associated to the business, right?
It's a great example of an anti-client. Behind you?
Speaking of tools, there is another framework that is quite interesting that I've heard of, which is called the iceberg canvas. And it basically just helps companies to realize the different side effects that their products or services have on a different set of people and populations. And they gave this example of Deliveroo and the delivery guys that were fetishized, speaking of Karl Marx's concept. So they were considered by people as objects rather than humans. So if they're late, then it's problematic, and they don't take into account their environment, if it's raining or not or something. So this canvas is very interesting because you realize certain side effects of your business that you can also turn into opportunities. So this is also a way for companies to and just diversify their assets.
That's super interesting. Do we have a way of sharing all of these resources?
That's to you, Milan.
So easiest first step, maybe tweet them. We also have a Slack channel that you should all have gotten the link to join. in the last newsletter, and there's in the Slack is a channel called Links where we post things, and there's a little bot collecting the links. That's what we have right now. We will think about making it a little more systemic.
It's a good start. So can I encourage everyone to tweet the iceberg canvas and add it to Slack, tweet the Flourish canvas and add it to Slack. If you've done some, any public papers that you can share, let's get those better distributed, because I think the anti-client meme is a very compelling one. And to come back to your question, you'll notice I didn't answer it. I think that is very dependent on the specific society that you're operating in. So, for example, in Germany, we had an answer from a German context. In the U.S., a lot of these things in the U.S. are done through litigation. Lawyers play an important role in the United States in addressing social costs, as we can see right now about all the opioid litigation, and that Purdue has been, they've decided to put Purdue into bankruptcy. In Canada, it tends to fall somewhere in between the German and the US model. But, for example, I live in one of the very few cities where there is no Uber or Lyft. So you cannot get an Uber or Lyft in Vancouver because we'll go into the political side of it some other time, but the result of that has been that Vancouver has lots of car sharing services. So the local car co-op, Vancouver has had a car co-op for almost 50 years, and it's transformed itself into a car sharing service. I can pick up one of their cars usually within a 50-meter walk. There's Evo, which is started by the British Columbia Automobile Association. So we have this, there's almost no need for Uber in Vancouver, except if you're drunk, in which case we don't want you to be driving a car, or stoned, which is, probably more likely in Vancouver. Hey, it's, where we come from. Roll your own has a special meaning. So I think I don't think there's any one answer to that question. I do think that governments have to some extent given up their responsibility, and the whole thing, the Silicon Valley quote, "move fast and break things." Well, okay, sometimes, but what if you break something truly fundamental? And that's led to some very, very poor outcomes for everyone. Does anyone here remember? Am I out of time?
Yeah, we're over time.
Okay, just one short story.
Sure.
Okay.
Wrap it up.
Anyone remember a company called Zenefits? Zenefits. So Zenefits was a hugely successful company that reinvented how the benefits industry. And this is back a few years ago, so they were one of the first, big tech unicorns. And the company imploded because they were breaking regulations left, right, and center. And they were breaking financial and agency regulations, and the company cratered. It's being reinvented now. So there is a cost to moving fast and breaking things as well. So that, I like moving fast. I'm not a very patient person. I like change. I'm happy to see the change in the companies I work in. But I think we can't just say we're not responsible for the social impact. Thank you.
Thank you so much. Please give a very